Hey everybody, so here is problem number 9 from the chapter 6 quiz access. The challenge with this one is that it's linked to problem number 8, and unfortunately when I'm in the instructor mode, it lets me do something called student view, so I can see the problem like you would see it. But in student view, my assignment doesn't work the same way. It won't let me like save like the previous problem. So if I do problem 8 and then move to problem 9, it gives me different numbers and they're not connected. When you do it, the two will be connected. So your work on 8 will be connected to your work on 9. So anyway, I'm just explaining that up front because this will be a little different than how you would see it. Anyway, so what they're asking us to do is to do the bank reconciliation and recording adjustments. In other words, back in problem 8, you made all you reconciled the bank statement to your cash account in your books. Now what we're supposed to do is we're supposed to do the journal entries to bring our book up to date with what's on the statement. So if you remember in chapter problem 8, and if you want, you can go back and look at my video on problem 8. But if you remember in problem 8, you have to make bank side adjustments and book side adjustments when you do a reconciliation. And the bank adjustments are where you adjust the bank statement balance for any items that are not yet to the bank. So those undeposited or checks, like the uncleared checks or the deposits in transit, those sorts of things that would show up on your books, but wouldn't yet show up on the bank statement because they haven't cleared the bank. So you make those bank adjustments for those. Then you have to adjust your book for any items that were on your bank statement, but aren't yet in your book. The thing is those things are actual changes, right? If they're on your bank statement, those things have actually occurred. And so what you have to do is do journal entries to enter those activities into your account, okay, those transactions. And so in this case, we have 4 transactions that we need to do journal entries for. And the first transaction, if you remember problem 8, again, you probably just did it, but I'm kind of coming at this cold, is we looked on here and we saw that we deposited, or we had $21 in interest deposited in our account. So we need to do a journal entry to recognize that and actually add that to our book. We also had a credit memorandum. Remember, the bank collected a debt that was owed to us of $1,580. We also had a non-sufficient fund check. This is a check that like somebody wrote to us, and then we added it to our books. And then when it got to the bank, it bounced, meaning there wasn't enough money in the person's account. And so now we have to deduct it back out of our account. There's $632 on our books that we thought we'd received, but we didn't because the check did not have sufficient funds. And then finally, we had a bank error where we discovered that we had written a check, or not, we had, let's see, check number 5904, so a check we'd written for 2106 and was correctly recorded by the bank at 20. So it's actually a book error, not the bank error. The bank did it right, but we find out that our bookkeeper, they typed it in as 2068 for some reason. So the amount of that error, $38, we have to correct in our books. So that's all we're doing here, is making these journal entries to make these corrections. All right. So let's see. It says record the entry related to the September 30th deposit if required. So I'm just going to scroll up here and I'm going to look at this September 30th deposit of $21 in interest. And again, I'm coming at this cold, so I'm not exactly sure. Let's take a look at these. This one is to record interest earned, the note receivable and collection, the related outstanding checks, the NSF check, and the error related to 5904. All right. So again, let's go back up here. We'll look for the September 30th deposit. So on September 30th, we had a deposit. Well, we had a credit memorandum of $15.80, and we had interest received of $21. But I believe they wanted us to handle both of those differently. And so I'm not sure what they're asking for. So I'm actually going to skip that one, and we'll come back to it. This one says to record the entry for related to the interest earned. So in this case, we'll say our cash went up, because we know this one happened, $21. And then our interest revenue, okay, they call it interest earned, it also increased by 21. So we'll debit cash and credit interest earned. Then we'll go on to 3. So this one says record the entry related to the note receivable and collection. And so that was this credit memorandum right here of $15.80. So if this was a note that was owed to us and we got paid, we're going to show our cash going up and our note receivable going down, because this money is no longer owed to us because it was collected. So we debit cash, credit note receivable. All right. We'll go on here. Record the entry related to outstanding checks. So we wouldn't need to record anything for outstanding checks, because the definition of an outstanding check is a check that we've recorded in our books. Usually when we write the check, we record it in our book, but it hasn't yet cleared the bank. So we don't need to adjust our books. The check's already in the books. And so that one's a trick question, I guess. And I don't know if it wants us to put like no entry required. Yeah, no journal entry required. All right, we'll go to 5. Record the entry related to the NSF check. So here, if you remember, like I said before, this was someone wrote us a check for $632. And now we found out that they didn't have the money. So this money that we would have entered as a payment into our account, we have to take it back out. So when this person paid us, we would have debited cash and probably credited accounts receivable if they'd owed us the money from before, or credited the revenue account at that time. So now that we find out that they didn't really pay us, then what we have to do is we have to debit accounts receivable, because now they owe us again. Is that the person's name? S. Nilsson? Let's double check. The NSF check was from a customer named S. Nilsson. Okay. So we're saying, hey, S. Nilsson, you now owe us $632. And our cash goes down because we have $632 less cash than we thought we had. And then finally on 6, record the entry related to the error on check 5904. So again, remember when we, with that check, it says, we wrote the check for 2106, but the record keeper misread the amount and entered in the accounting records with a debit to computer equipment. So they were buying computer equipment, and a credit to cash of 2068. So we just take 2106 minus 2068, which is $38. And we would recognize that the cost of our computer equipment, whoops, let's see. Yeah. The cost of our computer equipment is $38 higher than we thought it was. And our cash is $38 less than we thought it was. So because the check was supposed to be 2106, but we wrote it for $38, or it got recorded at $38 less than that. So this leads me to believe, back to number 1 now that I skipped, that there was no other deposit on September 30th except for the 2 we handled. Let's see. I'm going to double check. There's cash payments. Okay, no, so there is a deposit, but this deposit was one of those deposits in transit that was in our books already, but it didn't show up on the bank statement yet. So again, there's no journal entry required because by definition, this is something that's already in our books and just isn't on the bank statement. So I'm going to say no journal entry required. All right, now's the moment of truth. We're going to check our work and see how we did. So it looks like we got them all right, which is good news. Again, when you do it, you'll have just done problem 8. And so, it'll be, I guess, even fresher in your mind what these 4 things are, but it will definitely be the interest, where your cash is going to go up and your interest earned is going to go up. The credit memorandum on the note received, so where our cash is going to go up and the note receivable will go down. The money on the deposit on the 30th, there's no journal entry required because that's already been in your books. And the money on the outstanding checks on the 30th, no journal entry required because it's already in your books. And then we're going to have this non-sufficient funds check, which we always handle by debiting accounts receivable because the customer now owes us since their check didn't clear, and our cash going down, so a credit to cash. And then finally on the check error, because we recorded the check for $38 less, and your numbers might be different, but we recorded that for $38 less than what it truly was, then we're going to debit computer equipment to show an increase in cost to that equipment of $38 and credit cash to show 38 less in cash. I hope that was helpful to you as always. If you need help, don't be afraid to reach out. In fact, I made this video specifically because someone reached out and asked for help. We're posting it here for everyone. So have a great night and good luck on the rest of these. Well, this is the last one. Good luck on the quiz after this.